good morning, good evening, wherever you are in the world. Welcome to another financial modeling section brought to you by UrBizEdge. So for today's section, we'll be having designing chart of account for seamless budgeting. And our special guest for today is Charles Otoghile. So this session was brought to you by collaboration between UrBizEdge and also Financial Modeling Institute. So for some of you that be interested in taking the financial modeling exam, so they have the level 1, which is Advanced Financial Modeler, and also Master Financial Modeler. So UrBizEdge is a registered Microsoft Excel consulting, financial modeling, business intelligence, and data analysis firm in Nigeria. We also specialize in helping high-value professionals be on top of their business data. Also, we are the developer of some special tools such as Nigerian Finance Market Analysis tool, which can be found in Microsoft Office Store. So for some of you already know, we're also a training company here in Lagos, Nigeria. So this is our calendar for our upcoming training. So on the 4th, which is tomorrow, that's on the 4th of July, we'll be having financial statement for non-finance managers. Also on the 12th of July, we'll be having Python for data analysis. Also on the 15th of July, we'll be having big data analysis, Power Query, Power Pivot, and VBA in Excel. For some of you that be interested in big data using Excel. Is Charles Otoghile. He's a trained management scientist with majors in operations, research, and business information system, experience in financial analysis and also financial modeling. He's a Microsoft Office specialist in Excel and Access with VBA programming skill. He's proficient in big data wrapping and also analysis, and also proficient in SQL and MySQL, that's structural query language. He has over 10 years working experience in covering human resource management, business analysis, financial planning, and also analysis, also financial modeling and people training. So with no further ado, I'll hand over the session to Charles. So Charles, over to you. I'll stop sharing my screen now.
Thank you very much, Tumidayo, for that introduction. Quite nice. And I want to say welcome to everybody who has hooked in to learn something from this training. Okay, so just as you have heard, what we're trying to do is actually to look at how the structure of a chart of account can help your budgeting and can also help your financial analysis in your companies. Most of the companies we are in are already ongoing companies. They are companies that are existing, and most of them have applications that you use to manage your charts of account. Now, the interesting thing is that charts of account is always a work in progress, because time and again the business gets to see that, oh, we need this in our chart of account, we need this in our chart of account. So what today's class would help us to understand is what goes on when a chart of account is structured. What can you do going forward when you want to make some changes in your charts of account? That's exactly what we'll be looking at today. So I want to share my screen, and let's start looking at some things we should be doing. Okay, so I want to first ensure that everybody can see an Excel spreadsheet. Can I get that confirmation, please?
Yes.
Oh, that's fine. So the first thing I want to talk about is the balance sheet equation. It's an interesting equation in that it summarizes not just the account of a business, but summarizes a business in its entirety. Here, I have just two sets to show you what I'm trying to tell you about. I'm showing the balance sheet equation of seemingly two different businesses, you see. So you can see that the first one has assets of 1,000, but that 1,000 is made up of contributions coming from liabilities and equity. So what this simply means is that from liabilities, this business is getting about 700, and the equity is bringing 300, and together they have used this to get the total assets of the business. So that is the share of it. The other one is saying that, oh, the total assets is 1,400, but this comes from a 50-50 share between liabilities and equity. You get it, where you have 700 in one and 700 in the other one. So here you are able to see the share in liability and equity. This is something that most of us understand, and those who are coming into learning accounting also understands. But it is interesting for you to note that we have the the extended balance sheet equation. Now, the extended balance sheet equation, like you can see at top here, is what we have already seen in the first sheet. You see, we've seen this in the first sheet. So we have this addition below it, and this addition is everything that makes up net profit, everything that makes up net profit. Okay, so in summary, revenue comes into the business. There are some cost of sales, which is a cost, and there is some operating expenses. And if you put this together, if you take from revenue down to your operating cost, if you put the three of them, that should give you 200. And at the end of the day, you find out that if I should add up all this, if I should add up the equity here, it becomes 300. So 300 plus 700 is going to give us 1,000. You get it? Now, um, if you understand this, you're very close to understanding the structure of a chart of accounts. You get it? So here, I have these account types. So I can have an asset account, a liability account, an equity account, you see, all in there. And then we can also have other kinds of account, like a revenue account, a cost of sales account, an OPEX account, and all twisted into these types of accounts. And how many do we have here? We have about 6 of them here. And I want you to note that that 6 of them, because we'll be using them. Okay. So also, I just want you to, somebody asking a question? Okay. Hello. Okay.
Sorry
So
for the interruption. Sorry.
no,
I'll mute.
it's okay. I just don't want to miss anybody who may want to ask a question. So so I want you to also note this net profit thing. It's very important for you to note it. And I want you to see here, I deliberately did this because when I summed all of it, here, I have 2,000. Actually, 2,000 does not represent anything in this business at all. Because if we should take just these liability, equity, and net profit, we see it gives us 1,000. And that equates to the assets. You get it? That equates to the assets. So the equation matters, not what you might be summing and getting this. So I just deliberately did that to show you what this equation is trying to tell us. It's trying to tell us that everything we got here is wrapped up inside this asset. Now we'll get to see more of what is involved in this asset, because one of the assets is going to be cash, because you might be telling me our net profit, that might be cash. Are you telling me it's buildings, is this or that? No, not really. It can be in cash, and cash is just one of the things that you have in assets. Now, in your this typographical error is actually trial balance. In your GL, or general ledger, or trial balance, you know, These accounts, whatever is inside them, is recorded, you know, and I want to use a layman description here because I'm not an accountant, and the majority of us who are into finance may have not had accounting experience. We just want to understand how these things play. So there we find out that assets are recorded as positives, but the liability, the equity, the revenues are recorded as negatives. And then we have things like cost of sales and operating expenses recorded as positives. Now, the accounting equation expects that if you take out, liability and equity from assets, you should get zero. That's the universal check for all of these, either your trial balance or your general ledger, that it should give you zero. And that's the reason for recording it in this form. So, like you can see here, you see that this one is 1,000, it's positive, but these are negatives. Everything here is negative. Revenue is negative, and then you have cost being positive. Now, for some of us, with the cost is taking out money from us. So why is it not negative? Well, maybe you have that will be for another class where we have an accountant discuss all of that. But let me tell you this. Let me tell you how you can keep this in your head. Now, I want you to see from the equation that we must have a balance between the assets and the liability plus equity. Therefore, one has to subtract from the other to give us zero. The expectation is that revenue should be bigger than your cost, except you have a different situation. So if it is bigger than your cost, and I have that as a minus, as a negative, stored negatively, then everything positive about cost would reduce my minus 400, to minus 200. Now, my minus 200 is net profit accruing to equity. It's going to go there as retained earnings. So it has to be a characteristics with equity, which is negative, which is stored as negative number. So that is why you see that when I take out the cost, I get a negative 200, and it will make this a negative 300, and the equation will still balance. Okay, so if you have that in your mind, then it's easy for you to go to the next step to start understanding what goes
Hello.
on in a chart of account. Okay,
Hello.
all right.
Hello.
So at this point, can I ask? Do we have any questions? Anybody ask any question at this
Okay,
point?
so
Yeah.
I can see Godfrey hands up. So
Yeah.
Okay.
Hello.
Godfrey,
Can you hear me?
yeah, we
Good
can
Yes,
hear
I
you.
can
afternoon,
hear
bro.
you. Yeah.
All
Good
right. My name
Good
is
afternoon.
afternoon.
Godfrey from Ghana. All right.
Wow.
Just,
Welcome.
just, just
It's a
to
pleasure to
add.
have you.
Thank, thank you. Just to add on the negative and the positive, as you mentioned earlier.
Please,
Um,
please do.
the original record for assets and all expenses have debit balances. So those with debit balances normally counts with the positive, as you mentioned. And as you see, liability, equity, and revenue always have credit balances. So all credit balances have negative in terms of the chart of account, as you mentioned earlier. So that's
Yeah.
the main reason why you have the positive for the assets and the expenses, and the negative and the positive for the asset and expenses, and then the negative for the
Exactly.
equity, liability as well, and the revenue. So that's the
Thank you
clue behind
very much. Yeah, thanks very much. Yeah.
it.
Um, uh, uh, just a little explanation, like what you mentioned, I understand it very well because at the time where I had issues trying to understand it, I was talking to the accountants and others that look, you have to have a plausible explanation. But through the experience in finance, what you have said is just the explanation for it. I had the feeling that some in the audience might just be finance people without accounting experience, like I came in my own career and so on like that. So whichever way. Sometimes we are thrown off with this word debit, credit, and all of those kind of things. You get it. But if you follow it as he explained it, you would see that that also explains what is happening here. But if you are just too confused, just keep that one aside. Experience will give it to you. Don't worry. You must know it at the end of the day, but just follow this picture that we are having here, and it will help understand it. So what I want to do now is now to take us to, let's go to where we will now start understanding about this GLV. So I'm coming here, and just a flow from what we had discussed in our previous sheet, the extended balance sheet equation. I've brought out these account names here, and I've just given them numbers here, okay? So I have 6 of them. Sometimes in organizations, you could have up to 7, sometimes 8 of them, depending on how they have built, structured their charts of account. Let me just mention here that the structure I'm giving you here helps you to understand just any kind of chart of account structure that you might need. There are places where you would find that something like revenue will be split into 2, because this chart of account is looking at revenue from different streams of the business. There are situations where you might have something like the cost of sale split right from this place, so that if it is split, you're going to have one more additional account here. Whichever way it takes, you'll be able to understand what is happening going through what we are having here. So after you've had these 6, we're assuming that we have these 6. So I've just come here to say, okay, you know what? If I have assets, I have 2 subclasses of assets. It is the current asset and the non-current asset. So you can see that I now have 2 rows, same 1 as the account type. But when you go to the sub account, I'm using something different. I'm using 10 here, but you should understand it as 1 0. 1 0. And the second one is taking 1 1. So here again, you see the 1 0, you see the 1 1 here. Here again, shareholders, I've split it into the shareholders of the company, and sometimes you have related parties contributing to equity. So I've splitted this in this way so that I can have one that is just 1 0, starting from 1 0 and to 1 1. What this means is that I could have up to 99 accounts if I want to split. Now, in the real life, that is close to impossible. But if there is this asset split that I want to split, I can have 99 of them. You get it, splitting in that way. So this goes on in each of these. And let me just do something here. I can decide to say, okay, let me concat, bring these things together. So concat, or I could just decide to just go to 1 and then use an ampersand to join them, and then this one, see that? And then we have this here. Now, one thing I want you to notice here is that if I should check for duplicates by going to conditional formatting, highlight cell rules, and then duplicate values, this would not turn out any duplicate for me. It would have turned out a duplicate if I had something like this here too. So you see, it tells me that there is a duplicate. Now, in charts of account, each of the lines, these GL lines, should not have the same code, never have the same code. It should have a unique code. And this structuring helps us to keep that unique code flowing. So it simply means that if I'm to get another asset account here, if I'm to get another asset account, it's going to still have one here. It's going to have whatever name I want to give it. It's going to have 1, 2. See, it's saying, okay, this is an asset account, but it is the third one counting from 0. So you could also start from 1, 1 here and then go down like that. But it's just saying this is the first one, this is the second one, this is the third one. And if I come here and here again, you see that it doesn't give me any duplicate alert. It's just telling me that if I see this code, I quickly know that 1 is asset, okay? And I quickly know that using the last digits, I know that this is the first one in that asset account. Most likely is the current asset or whichever you are giving it to. I know this is non-current asset, and I know this is some other assets that there might be. So I want to believe that everybody understands it. So if you go further, you see that that's the same thing. I do have current liabilities, non-current liabilities, and this has been so structured to give us these unique codes there. Same with the equity. And if it doesn't have, for example, this is revenue. And here it's also revenue. And there we have this one there. So you can just have them like that. Now, one thing it helps you to do is that you understand the structure of your chart of accounts so that you can tell somebody if it's a 6, it's OPEX. If it's a 5, it is cost of sales. If it's a 4, it is revenue. If it starts with a 4, it is revenue. And when you want to do analysis with it, these helps you to pick what you want. I'll say more about that later. So let's go further and then see how I do this. Now, remember that we have the account types, we have the sub accounts, but the thing is that we have some other sub account names here. So you can see that in asset, I have cash, I have bank, I have receivables, I have paid prepayments, things that I've paid for and I'm yet to enjoy the benefits of them. I have them here. So these are subs. We just discussed about these ones. We just discussed about this. And so you can see where this 10 is duplicating here because everything here is a current asset. But when we come to the other sub names, the sub names now, you can see that I'm no longer using 2 digits, but 3 digits. Does it mean that you can't use 3 digits here? Yes, you can use it. What we are just saying is that use digits that would help you, to identify the different, general ledger lines, GL lines that you want in your chart of account. So I know that while I may have just current and non-current accounts here, when it comes to these sub-names, I could have them so many. So you can see that everything here are assets. You see that they are assets. It's just that they are split between non-current and current assets. Okay, so that's why you have them. So I'm using 3 here because these can be many. In some chart of account, you could have this one going beyond that 99, and so you could have them named in such way, and it goes the same way. Remember that here I used 10. I used 1 0, 1 1, 1 2, and like that. It's the same thing here. So you can see that the first digits here are just still 10, 1 0, but you see the last digit starts from 0, 0. Okay, so maybe I just made a slight mistake here. So this one can be 1, this one can be 2. Yeah, and this can be 3. And you see that it doesn't create any problems. It just makes it recognize like that. Now, the beauty of this is that tomorrow, if there is a 4th line that we want to introduce, I can easily introduce it and just put it to be 1 1 0 4. 105, 106, 107, and it continues like that, and it works. So what I did in this last column was to just concat it, bring them together as one, or I use this other way to show you that in some charts of account, it is presented like this. So that if it is one, it is an asset. And if it goes to the next digits in it, I can be able to understand which is current and non-current assets. And then the last one will tell me what name that GL line had. So this has been done for all of them coming down. You see, it has been done for assets, for liability, and all much of the things you want. It goes just like that. Almost often, you are going to have the most in your OPEX lines. Okay, let me quickly show you something here. You see, in some companies, they could have said that employee cost or employee OPEX is just one line, and you just load whatever it is into one line. You see, so what that means is that your basic allowance, your basic pay, your allowance, your pension contribution, and other things that may constitute your employee OPEX, you just put them all, the value in one line. But this will not help your budgeting. It will not help your budgeting. The reason is that in budgeting, you might want to use your basic pay as a basic for computing this employee OPEX. So you want to know, okay, what has been my basic pay all through, especially in companies where basic pay is not fixed, it's not standardized. Say, oh, if you are in level 1, this is your basic pay. If you are in level 2, this is your, because some people come negotiating their basic pays and all of those things change. So I want to know the total lump of basic pay. And if I know that in my head, I can easily tell what employee costs might be, depending on the percentage that all other lines may take. You see that? So it is very, very important for you to break down your expense following the principle of materiality. What I mean by that is that you might find out that there are some big chunks. I think I did one here. For example, rents. Good. If you lump up all your rents together, when you are doing your budgeting, you might say, okay, let me use what is total rents to project further. But it might help you to see which are the big chunks. Is it headquarter rent that we are paying more? Is it rent from a particular branch that we are paying more? Is there something we can do to either to reduce this cost? You see, is it one of the items that has the largest of budgets? By the time you break your charts of accounts this way, it is pretty easy for you to look at the large chunks and then make decisions based on those large chunks, rather than when it is lumped up together. If it is lumped up together, you start asking the accountant that, can you give me a schedule of your rents? And so on like that. It might come with so many spreadsheets, and you might be overwhelmed with the tasks that you have to do as an FP&A or a budget control person. You get it? So that is why you need to structure it in this order, so that you get some sense of organization. So when you just want to budget, all you need to do is just tell them to download, depending on the period you want to use, last quarter, you want to use the last 6 months, you want to use the last 12 months. And this can be given to you by downloading the charts of account and the corresponding values that go with them. Okay? So at this point, I don't know if anybody has a question.
So there's no question so far. I think everyone has been getting it. So.
All right. So the next thing I want to show you, and let's practice on that. I want to make a duplicate of this, and I want to show you how, with some of these lines, what happens when values goes into our charts of account. Let me just tell you that if you have something like this organized, You see that if you have, because we have a lot of startups coming up. I can use an application like Microsoft Access, upload this thing, this table that I have here, and then use it to create an accounting system whereby at any point in time with a form, you can be able to enter that and pick, oh, I want to, this is an asset transaction that is going with maybe going with an asset transaction or an OPEX transaction. And then when you bring it up, you'll be able to see all these things. All these will be coming as drop downs for you to pick. And then you can do your double entry there, post it in there. And every day you can be posting whatever. At the end of the month, you have your chart of accounts and you have the corresponding values to them. Some of our accounting software requires that the business structures a chart of accounts to use to carry out their ongoing business. So this is how you go about structuring it to get exactly what you want. Like I mentioned before, with this kind of structure, you can easily insert, you can easily create another role within any of these account types, and then it will work seamlessly with all what you have been doing in the past. Sometimes the CFO will say, you know what, cost of sales, let's break it. Let's break it to cost of sales that is attributable to revenue from stream 1. Let's have cost of sales attributed to revenue stream 2. And that is a good thing to do, because by the time you are doing budgeting for revenue stream 1, you can quickly see what has been the percentage of cost of sales over the period you are looking at, and you can quickly apply it to your budgeting. So I'm going to create another, I'm going to move and create, let me go to the end. Let's make a copy. And let's just rename this to be postings. Not really postings, actually, but this is what I want to do. I'm going to get rid of these ones. Let's delete this ones. Let's delete this one. So this is something I've done before. I've done it in a company I worked in and so on. So we just have these, we just get our chart of account, full chart of account. Sometimes it comes with the periods that we want to use to benchmark our budgeting, you see. So here, I'm just going to hide this column. I'll hide this column. I need to hide this one. We've already used them. They can always be taken out. As long as you have this, you can always do a lookup, you know, because these are unique codes that you can use to build up whatever you're doing. I'm going to hide this one. Excuse me, hide this one. And I'm going to hide this one. I'm going to hide this one because this one helps us to see things much more clearly. So we have these ones with us here. So what I'm going to do is I'm just going to come here. Let's assume that we have this here. I'm not very good with colors. I'm not fine at this, so just bear with the colors I use. So assuming I have this and I have month 1. So I just extend it to get maybe up to month 6, like this. So like this, I have these different accounts here, and then I have these different months. Assuming I just want to do a budget or something on them, you see, and I come down. I'm just going to link this one here so that I can see them below. And that's one thing you can always do when you're doing your budgeting. You see, what I want to do is that I want to do some, there might be schedules, there might be inputs or whatsoever here, and I can link them up to the line that they that corresponds to them. And before that, I will just do this. I want to sum everything here. Sum everything up here. And then just go this way. I may want to format these so that they have commas in their values when they come in. And let's just try something. So let's assume that I'm trying to do something on revenue, okay? Now for revenue, I want to do something on revenue. Let me just come here. Let me use here. If I want to do something on revenue stream 1, so when I say revenue stream 1, we are just saying that, okay, what do we get? Let's assume that this company, I want to generate some numbers. So I'm going to use the run between. I'm going to use the run between function. Let's just say generate for me anything from 250 to 350. Okay, let's say 350. And here, so here I've been able to just generate some kind of revenue. You get it here, and I'm going to just copy them and just paste them as text so that they don't change, because the rand function with the numbers will be changing. So here I've just locked them to what it is here. Now, once I do this, I call this revenue. You see, I can easily go to my revenue stream 1 and then just equate this to this. Okay, so here I have it. And I usually, once I know the last column I want to use, I usually hide all this one so that it allows me to use this. Actually, I'm using this system. I'm using Excel 2016. So with Excel 2019, you could do better than what is here. So now I've done this. Now look at this place. Look at this. This is what it is showing. This place should be 0 at every time. So something is wrong. Something is there that we need to do. Now, you may have been told that of every revenue that you have your cash revenue, and then you have your receivables. And you may have been told that your cash revenue is usually maybe 65%. And then I'm just going to follow some things I'm modeling here. Okay, yeah, let's just have this. So, and then for my receivables, it's going to be 1 minus whatever is here, 35. So it simply means that whenever I make revenues like this, you get it, and I'm going to lock the row because I want it to stick to this row. I need to 65% of it. I'm going to lock the column here. And so that means a $sign behind the H. So at any time I do this, I get these as my cash. See that? And whichever way you want to do it, you could just draw this down, or you could just say this minus this, so you get the balance. So by the time you add up this, it will always add to your revenue. You add up this, it will always add to your revenue. So what this is saying is that, okay, I'm going to get this cash of this amount. Now, cash is an asset. So I'm going to look for my asset. I see my cash. I've already gotten my cash value. You get it. So this is going to be cash. And given that, I'm going to have this one here. Sorry, I ought to make this a negative. We had that understanding previously. So negative like this. So you can see what is happening, that what is remaining is your receivables here. You get it, is your receivables. And these receivables agree with what is here. That's assuming that maybe your receivables, you get all of them in the previous month. We are not going to dive deep on breaking it down, but it follows these principles. It might be that in the next month, I'm going to get 25, and in the next month, I'm going to get 10 or whatsoever. That can be modeled, and then you can be able to see. So all I need to do is just find where is my receivables. My receivables is an asset. So here it is. And by the time I come here to just, just like this, it's positive because it's an asset. You can see that because of my postings, I now have 0 here. You see, I now have 0 here. Okay. So what really happened, what has happened here is that I posted my revenue. And because I posted my revenue, the other part, the entire revenue breaks into 2 parts. Part is in cash and part is in receivables. You see, so if I were doing these things in an application like assets, by the time I take my drop down and pick my assets, and my assets, I pick my cash, I pick my receivables, and it shows there. And I also go and pick my revenue and then pick revenue again. I will be able to do all these postings almost automatically, and that will balance up my GL account. Okay. So let us look at something in expense. Let's do, because of time, I just want a situation where I can capture as much as I can do. So here, I just want to show you how it builds up. For consistency, I'll just use this here, then like this, and then just call this cash. The reason is because much of your transactions might be cash related. So if I have something like my opening cash, I have additions, I have subtractions, and then I will have my closing balance. Closing balance. Like this. Yes. So it's good for you to have this, maybe if you're doing budgeting in this format, because you'll find that you are going to have a lot of ads coming in. So, and you'll see what I mean by the time I do this. So just have this, make this, sorry. Okay. I hope we can all see my Excel screen. It's like I took it out for a while. Okay, so here it is. Now, remember that you have cash from revenue. I just want to do this. I just want to take this cash that we did here, this one here, I want to put it here. Okay, so before this your less than, I want to have summation of this. So I'll be doing a lot of things here. Okay, this is bold. Let's just put a line like this. Okay, so here, anytime we take out cash, we'll bring it somewhere here. And let me just move this. Let's put it somewhere here, waiting for us to use. And then our closing balance will simply be, anything we have as our total cash less anything we have as this one here. I think that should work it out. Okay. So let's try it and see how it works. Okay, so for now, our closing balance for cash is this. And when we come up here, it's the same thing. So I'm going to just change this one to this place. Okay. All right. So everything works fine. What I'm trying to do, you understand it when I do another transaction now. So this time around, I want to do another transaction. I want to do a transaction on cost of sales for this same stream one. So it will be cost of sales. But it's revenue. Oh, cost of sales. So this is cost of sales. What I should have done here was simply to just lock the row here so that I can always copy it. Anytime I copy it, it would remain. It wouldn't change. So if I copy from here and put it here, I don't need to do any adjustments. It just works fine. All right. So this is cost of sales. Cost of sales stream one. And so for cost of sales for stream one, I can just easily go to my cost of sales. These are the items that makes up the cost of sales for stream one. And I'm going to put them here. Now, I may have been told, or from observation, we may have found out that each of these guys have a certain percentage. For example, this might just be a 2% commission. This might just be 25%, and this one might just be 5%. So it simply means that the total cost of sales on stream one is going to be this total. Now, it is good to have it because I could have just said 32% and start spread it in my budgeting. But by the time it takes this form and I have them as inputs, you can discuss them. You can improve on them. You can know its effect on your whole budget process. You can be able to know them. So rather than how do I split 32 now, you are able to know all of this even from your budget. You are even able to justify your budget if you have them in this format. So it simply means that from my stream one, this multiplied by this, let me just lock the row. And in this one, I want to lock row here. So it simply means that this is what it is. And I can just get it down and get what the total would be. So this is what my cost of sales is turning out to be. Cost of sales driven by revenue. This is what it is coming to be. Now, notice that much of your cost of sales might be from your vendors. So we might have a third-party vendor. He does something for us, takes 2% of every revenue that we make. That means chances are that you are going to pay him some amount as cash, and you might pay him some amount later in other months. Now, it's easy for you to just get that out by simply stating that, okay, if what I should pay him as cash and what I should pay him as payables, which goes to my payables, is anything of this way, possibly, so it's maybe something like 45, and then the balance, I'm going to give it to him later. The reason why I'm changing this is because this is an equation, not an input. It's not a direct input. So if it goes something like this, then it's easy for me to compute what will go as cash, what will go as cash, and then what will go as his as his payable, as the payables that's attributing to that particular vendor. So I can easily compute it here. I can easily compute it here. Now, whatever that total is will just be a check to ensure that I am correct. Okay, so actually it ties with whatever this one is. Okay, so let's make it beautiful. Okay, so that is it here. So after I've done this, then I have where I can go and put it. So I will come to this cash guy. I'll put it at whatsoever. Maybe I just put it at cost of sales and rev stream one, whatever name makes it easy. I know that I'm paying this out. I'm going to come here and have it here. So this is going to be negative because I'm actually paying it out. It's getting out of your cash. It's going to take out of your cash. So this one would just, sorry, have to include this guy. It has to include this guy. Okay, am I correct? Yes, it's going to be something like that. So can you see here now? In my balance here, you can see that what is shooting out is just, excuse me. So what is shooting out here is just equivalent to what we have here. So let's increase this so that it looks like money. So I've been able to take out from my cash what I'm paying out. And then for the payables, I need to go and put it in my payables. So I'm going to look for my payables, which is a liability. And then I have my account payables here. You can also split this, your account payables, into two parts, into your stream one or stream two. But you can see how that applies in our budgeting. So I'm going to come here. It's a liability. So where are you? So where are you? Here is it. Okay. So let's go and see our balance and ask ourselves what is happening. So you can see here, I'm getting the total of the whole thing here. So I'm going to come here. That is this is my liability. And then, okay, to be subtracting from this. Where did I put it? Something is not coming in here. And liability, Steve, which is this. Then my expense, where is it? The expense on cost of sales. Okay, here. So my expense or cost of sales will all come in here. So I'm going to come here, and my expense of cost of sales is going to be, it's going to be here. Where are you? This, and then down for the three of them. Okay. 1, 2, 3. Okay. 1, 2, 3. So I have something else I'm not putting in my cash. What goes into my cash? So what goes into my cash? What gets out of my cash is, where is it? Cost of sales. 47. So that gets out of my cash. So I need to balance something here. Sorry, just give me a minute. I think that's 220. So why do I have this? What is here? Oh, I see where the problem is coming from. So maybe I shouldn't have put this one here so that that minus takes place below. Okay, that's fine. So if we go up now, we see what is remaining is this guy. Good. Then, where else again? The other balance is what I need to take care of. This balance 109. Payables. Let me just confirm that I did the right thing for my payables. 59. Yes, okay, so that is nice. So where am I having this? I need to, my double entry, 119. 119. 120. Okay. Let's see, this is this 35. I'm saying that I'm paying 45 as cash. 45 of this is cash. 50 this of this is cash. This is payables. Okay, so I guess it's my, where's my cost of sales? Cost of sales total here is 108. So I'm correct with that. 108, 108. Sorry, Odell must have done something. So I need to, this cash, yeah, cash is the cash payout that came here. Paid without this cash. Subtracted it from here. That becomes my. Oh, pardon me. Let me just something is wrong here. Where is it? So I want to test it to see where the problem is coming. So this is zeros. Where is the problem coming from? So if I do this 5%, 18, where is 18 coming from? So it's this minus this 1.6 something. It's 100%. And this, yeah, is it coming from? It's 100%. This goes in here. spend this on this. Nine, 16. Okay. Anyway, I'm trying to actually see where I'm making a mistake here. I think, but all my percentage are fine. All they are 100%, and I expect it to return 100% there. This is coming out as this, and so this is my cash that is returning here. So what I'm trying to say is that actually you can use these methods to build your inputs, pass them up into each of these lines, and then you would get you should be able to get your cash. You should be able to get your chart of account speaking directly to your financial statements, which is my cash. So this minus this. Where that's nowhere. So anyway, I can share the workbook, and then you could do your practices on it and see where this is happening, because normally this should come to 0 after I have put in all my entries into it. This is my pay, this is my liability because I'm owing this. This is my cost, and then the cash that I paid out is returning inside here. Cash that I paid out, so cash, and this is one asset, and then this other one is my cost of sales. The total cost of sales. Yes, that's my total cost of sales. Oh, I see where the problem is. No, that's not a problem. I shared it. I shared it this way. So pardon me for coming into this and bringing into this calculation, but I should be able to fix it and then be able to give you a share of it. So the idea I just wanted to put before you is that you could have your charts of account above, and then you could have you could model up your values into your charts of account. When it gets to your charts of account, you have a budget financial, then you can have your actual. Over time, you can compare it. You can actually feed this into your Power BI as a table, and then do analysis on it. So if you have your actual, you have your budget, you can do comparison because it's a table like this. I don't know if I still have time. Hello?
Yeah, actually, is you've gone like beyond the time limit actually.
Oh,
But you can
sorry,
still
sorry,
continue.
sorry.
But you can still continue
Yeah,
because
yeah,
we're having
yeah.
another
So,
section by 4.
oh, you have a section by 4.
Yeah,
Okay.
well,
I am just
no section by
so
4.
disturbed that this thing is my cost of sales is not tying when everything ties. Let me just see where this problem is. So this is 5. I think we have 25. We could actually have anything here. And this is, let's assume it's 4. Anything. can take it. So is this, let me look at each of them to see that they are calculating right. Take my revenue, give me 5% of that. Take my revenue, 5%, and just 5% here. Take my revenue, 5%. Everything looks fine, but except if this is not. So confirm it by going down here, then come here, check. So this one checks for the total, which I'm paying 45% now. And then this other one, which I'm paying 55%. I'm going to pay 55% of this. So what is the difference of this? So I don't expect that. I'm just testing that one to see that that works. So this is what, confirm it by copying it down. Yeah, and then here, this is cash from revenue, and then this is this one here, and then go back to see where it looks into. This is my cash. I'm going to pay it out by subtracting it here. Okay. All right. So what I can do is quite unfortunately, what I can do is just go through it. I can share you the file, and then you can share it with participants. You know,
Awesome,
and
awesome, awesome,
yeah. So
awesome.
that would help us.
Even
That
some
would
people are
help.
actually advising that it actually happened. So I've seen some comment. They said it's normal. So it's
Charles,
so Charles, I
Yeah,
want
hello.
to say
yeah.
thank you
Hi,
very much for
Charles.
Yes.
Yeah,
Hello. Yeah.
yeah, I think your account payable need to be negative. Maybe you check your account payable showing positive, and it should be
No,
negative.
for my accounts payables, my account payable is a liability account, and it should be positive. I think it should be positive. You get it? So it should be
okay.
positive. Oh,
Okay.
wait. What is revenue doing? Revenue. What is revenue doing? So revenue is taking this one and it is making it next. So that's fine. Revenue is doing what it should do. You get it. So I just need to know what this 26 makeup is coming out. Where is it coming out from? So let me test it by simply um, so I don't want to cook the books. 126. Let's find out where is 126 coming from. 126. 126. Not from this. 126. It's not from this. 126. Summing everything here to give me 126. So if we say this and this, it's not even giving me 126. This.
I mean, you should turn the account payable to negative. Let's see.
Okay, the account payables. Okay, let's do
Yes.
that. So if this one is negative, and then here, really? That looks like doing it. So where is the problem coming from?
Yes, now it should be negative because you said from the onset that
Yeah,
liability is negative.
yes, liability should be negative. Oh, now I see where the whole thing is coming from. Okay, that means I ought to make it negative here. It ought to be negative here, then I read it up, you know. So what was confusing me is because I wanted to get this total. So if this was negative, negative here, then by the time I bring it in here, it should have given us negative. Thank you very much for that. Thank you for that addition there. So it gives me my zeros and my zeros here. Okay, it gives me that. So I will give you the second loop, and I will share the template and then have
Oh,
our participants have it. I would still state in that place, I would just state what the issue was, and then I would give it that second I'll give it that second loop. So I want to thank everybody for
awesome,
coming
awesome,
and
awesome section,
joining
Charles.
this.
So I was meant to
Part of
ask you.
it, you would have known that you at least we now know how to structure a chart of account. So you were asking a question, please.
Yeah, so usually whenever I have a special guest like you, we usually ask them two questions. So we used to ask,
Okay, what's the
can you
question,
tell us
please?
how you start your whole financial modeling journey, and also what advice you have for people just starting out in the field of financial modeling?
Okay, now I get you. So, actually, I started my financial modeling some years ago. I was dragged into it. I didn't want anything finance. But when you're good with Excel, the chances are that you're going to have the finance unit saying, just come in and then do something for us. I actually entered a department where all I knew was Excel and nothing of finance or accounting. So I had somebody who was with me who who was an accountant, a finance person. So they were just there telling me that, Charles, this is what we want you to do. This is what we want you to do. Use your Excel to do this thing. And so that's how I got everything about finance. I fell in love with financial modeling because it exploits my Excel skills. You get it? So that was how I came in. And so I've spent over 10 years within the finance unit. Currently, I'm out of the finance unit. I'm now in the data management unit where we do SQL, we do Power BI, we do all of those things, and so on like that. Just transitioning to full-fledged data management. So don't
Wow.
think I've left you guys. I still have my experience behind me.
So, what advice is there for people just starting out in the field? If you have any advice for.
It's practice, it's practice. So what is there is that, like what I did today, you can just go in and then you can just say, I want to create so and so and so. You see that, and then you start doing. You're going to have errors, you're going to have problems, then you find how to resolve those problems. Interestingly, when you get to the workplace, you will still find those kind of problems. Sometimes you'll be standing and telling them, this is the solution, just do it like this, or just do it like that. You get it? So
Awesome.
that is how it works. So you just need to do a lot of practice with Excel. Then for Excel, because you know it has two parts, this financial modeling thing has got two parts. It has the Excel aspect of it, it has the finance. A lot of people have the finance knowledge. You know, a lot of people read accounting, banking, and finance and all, have the finance knowledge. But the thing there is that the Excel one is where they struggle. And it's understandable because much of what we did in finance were rules that we had to follow. In Excel, it is not rules, it is arithmetics. It is your ability to put tools together to get something. You are using codes, you are using formulas to come up with this thing. So you just have to be used to them. And it's not something where you have to put in your head that, oh, this is the standard, this is the finance standard, accounting standard for something like this. No, Excel is not like that. You just have to play with it, and over time, it becomes a part of you. You know, that is what you just have to be able to think, what tools can I put together to get what I want? That's how it plays out.
Awesome. Awesome.
Yes.
Say thank you. I've actually dropped Charles' LinkedIn also. So Charles, thank you
Okay.
very much for honoring our invitation.
Thank you
So
very
we're having
much.
another section by 4 p.m. Yeah.
Okay.
So we're having another section by 4 p.m. We'll be having topic data modeling and with Power Query and also with pivot table. So everyone, bye
Okay.
guys.
Thank
Have a
you.
lovely
Bye
week.
bye. Yeah.
Bye.